We have 4 knowledge-packed webinars for you on 14 December. Here's how you can check them out. The first one is on SIPs, do's and don'ts. So how can you make SIP a game changer in your wealth creation journey? This webinar will be available in Tamil and conducted by Akash and Samyuktha, and also in English conducted by Harshil. At 11 o'clock, we have a webinar from Sphere, I Thought PMS, which is going to be on how to navigate market volatility with multi-asset investing. And at 12 p.m., we have a webinar conducted by I Thought Plan, where they're going to be exploring how stepping up your SIP game can be a game changer for your wealth creation journey. You can register for any of these webinars using the link in the description below. Let us know what you'd like to learn next.
In the second part of this conversation with Mr. Shyam Sekhar, where we are talking about NRIs and addressing their very specific questions, let us continue on talking more on the investment approaches and his opinion on them. Let's say I do or someone does move abroad and plans to settle there. How do you take care of the generational wealth? Let's say you have a family business. Let's say you have some kind of ancestral properties. It does not even have to be real estate. How do you move this forward if you have set your base abroad?
So increasingly, in many communities, the children are not wanting to live and work where their parents raised them. The assets are in that place. They don't want to come there. So, beyond the lifetime of the parents, it is going to become a liability for these children. What the parents have created as an asset becomes a liability for their children. Who is to go and take care of that? Who is to go and sell it? Suppose there is a tenant who is going to vacate him and get the property back. So, a lot of problems. I think it's very important that if you are not going to come back in the lifetime of your parent itself, you have to close out all these issues and convert it into financial wealth first. And don't create cash. It's a disastrous thing to create cash. Legitimate financial wealth should be your only option. So create legitimate financial wealth by converting these assets in the lifetime of your parents. Once you do that, make sure your parents are very comfortable. Settle them well, because it's their money only first. After that, you put your investments in some place where it will compound decently. And then decide whether you want it to grow further in India or you want to take it to where you reside, because some people are never going to come back and they feel they don't need money in India. They can repatriate that money and take it abroad. That is an option for them. And they should exercise that option. So, be mature. Don't wait for the passing of your parents. Don't wait for a crisis. What if you are not able to come one day, your health is bad? Because I have seen this case again. Parents' estate is here. They don't do anything. Parent is today 90. The son is 70 or nudging 70. Son has poorer health than the father. Okay. Grandchildren are born to an American. They don't relate to India at all. Now, who will come and do all this? 90-year-old man or the children of the 70-year-old or some cousin or uncle or somebody. So, then they have to depend on other people. Then whatever they give you is the outcome. So, you can't get the best outcome. So, everything has to be done in reasonable time. When people are alert, their faculties are strong, their authority is still available for you to, migrate from one asset class to another. They must be in their senses, they must have power in that locality wherever they are residing. They must be able to go to a place and get things done. They must be able to deal with lawyers. All that should be available to you. So, don't assume your ecosystem is going to always support you the way it did 20 years ago. Because your ecosystem in India is progressively weakening, especially if you are an NRI, it is not becoming stronger. Right?
Correct.
So, if there is a need to move estate from one generation to another, do it in reasonable time. And even if you are going to leave the money with your parents, move it out of the estate into financial asset and leave it with them for their lifetime. Let it move to you after their lifetime or as you both mutually decide. But don't keep it in some plot of land somewhere which you expect your retired father who is 80 to keep track of and to protect from encroachment. All these things are very rich expectations. and unrealistic expectations. We should avoid all those things. So I think the movement of a legacy wealth should happen based on the circumstances of the legatee, the person who is receiving it, and the physical capacity of the person who created the legacy. These two will weigh on the decision. Ideally, we should do it early. You should not wait till it's too late or too difficult for one or more of the parties to even execute that transition. Then it becomes a big crisis because you are in the hands of people who can do anything to you. There may be your friends, relatives, but I have heard many cases where they have taken undue advantage of this weakness. The human nature is always like that. So you must only protect it by acting well in time.
To kind of wrap up the real estate and NRI thing, is how should someone view buying real estate abroad? Let's say I make the decision.
See, a lot of people are going and buying in UAE and all these places. Unless you are going to live there and you see a future for yourself, I don't see any merit in going and buying real estate outside. Because wherever you are going to buy is already a heated market. India is also a heated market. So you are going from one heated market to another heated market. And we don't know what will happen because the supply that is created in these markets is huge. And you are not going to be there. So you are like an absentee landlord. So think through these things. Don't blindly take money out. Unless you are wanting to live there and you want a certain quality of life. Many people are doing this. But I am not a big fan of going and buying real estate outside unless I am going to live there.
Now coming to one very, very important question. It's a mystery asset in most people's portfolios, NRIs especially, but people do not know about it. We're talking about ESOPs. These people earn it from the big tech companies. A large portion of their wealth is concentrated in these single companies and they keep on receiving these grants as long as they work there. How should they view it? And most importantly, how should they manage it so that the risk is well diversified?
See, firstly, it's a very happy problem to have. That you have earned your salary from working in a good company and the company also gave you shares which are kind of a stronger optionality to create wealth. It's a positive thing. But it is important that you retain that positivity in your life. For example, a company gives you ESOPs. Every year it is giving, or for some frequency it is giving you ESOPs. Now, you don't allow it to pile up like a mountain. Once it reaches certain threshold, like say 50-60% of your wealth, then you start trimming it and you invest that money in other asset classes or in other assets within the same asset class of equity, which are relatively stable and will give you decent returns. So you basically keep on de-risking yourself. As the valuation goes up, you trim and take some money. So you continue to enjoy the fruits of your labor, which you got in the form of ESOP. At the same time, you don't make it a risk to your wealth creation. You cap your exposure to that asset class and gradually keep reducing it. So when you do that, wherever you invest, the proceeds of sale of this ESOP should ensure that your wealth continues to grow at the same rate as this ESOP, if not a better rate. So you need to be very, very nuanced and meticulous in doing this transition. And this transition should not be indefinitely postponed. You should do it in a timely manner. If you do this, you would have had a good salary, you would have had a good ESOP, and the ESOP would translate into significantly higher wealth with constant de-risking. So that is the approach that I think is ideal.
So continuing on, in the US, we are increasingly seeing a lot of companies remain private due to how the private equity landscape is. Do you think something like this is also already happening in India? And what is your thoughts on it?
No, it cannot happen in India because India is a capital-starved country. Entrepreneurs are capital-starved, enterprises are capital-starved. So, business needs more capital. When business needs more capital, it will access the capital market. You saw this SME boom that has happened in India where SME valuations have gone up to 1,50,000 crores, where they raised some 10 or 15,000 crores, right? Now, just see the benefit of somebody giving 10 or 15,000 crore, catapulting the valuation so much. Now, whether those valuations sustain or not is a different debate. But the appetite is there. And some of these companies will do well. Okay, like quite a few of them may fail. But that's part of the game. That is how it has to be structured. Delinquency in small businesses It's a way of life. It's a fact that you have to live with. But first they have to try to grow before they become delinquent, right?
Yeah.
For that growth, they need capital. They cannot wait to earn profit and then through that profit create the capital for the growth. So I think India is a country where capital absorption by enterprises is at its highest in our history, and it's only getting higher and bigger. So more money will be raised. I don't think businesses can remain private if they want to really capture all the opportunities that are available in the economy. If they really want to do that, they need to raise capital, they need to take their ventures quickly to the next level. And capital is the only fuel that will make it happen faster. Because other skills are all available anyway. But the differentiator will be availability of capital.
So here at iThought, we deal with a lot of NRI clients. In your opinion, what is some of the common mistakes and misconceptions that this group of people particularly have made or have?
Firstly, I think they come to equity very late. They go to real estate very early. They stay in real estate too long. And they also are great patrons of the banking system. They over patronize the banks. This is what I have noticed in NRIs. How do they do it? The banker decides their investments for a lot of people. Often the money goes into investments that should never have been chosen. So their reliance on external agency is very high. So their ability to control their outcome becomes lower and lower. I think that if they had a more financial focused asset allocation, and that financial focused asset allocation was efficient, not what the banks are giving them, then I think what they can create out of their career savings and investments out of that career savings will be significantly higher.
Yeah.
And if they start it early, time becomes a very big driver of wealth creation. So these are some of the things which NRIs can do better. At the moment, few people are doing it right. Many people are not doing it as well as they should do it, or they are capable of doing it. When you are capable of doing something and you are not doing it, later when you realize that you have very high sense of regret. I feel that an NRI should always work to eliminate that regret. You should not allow it to form itself instead of trying to cure yourself of the regret. I think you should not allow regret to build. If you should not allow regret to build, you must be proactive and you must be in all the right asset classes and you must be focusing on longer term outcomes rather than the shorter term outcomes which people around you may be focusing. And you must be very goal driven. You should set a milestone, you should have a goal, you must reach it and then set the next one and keep expanding your potential continuously. If you do all these things, then the benefits of a successful career will translate into superior wealth. Nothing can make you happier.
As you said, rightly said about asset allocation. How important is a multi-asset investing approach in the eyes of an NRI, sir?
I think it's extremely important. They are already doing a very inefficient form of multi-asset. Very heavy on real estate, then very heavy on bank related investing. It could be a NRI deposit, or it could be some ULIP sold by the banker. It could be anything connected to the bank. So, and then some random equity. And then insurance overseas. A lot of NRIs have insurance overseas, like this Zurich type of products. So you are doing multi-asset now, but it's an inefficient multi-asset. You have to bring an efficient multi-asset where financial assets dominate, liquidity is very high, you are never locked into anything, and your returns are higher than the current multi-asset form that you are practicing. Current NRI multi-asset, according to me, earns between 5 and 8%. Even if an NRI raises it to 10 and 12%, I think he will be hugely successful. More importantly, he'll have confidence to gradually raise it because he has done it successfully. I think developing that confidence requires a holistic approach and a very consistent approach. If you do it consistently and holistically, then you will have a multi-asset which is far superior than your existing multi-asset approach. And that new multi-asset approach will serve you not only when you are working abroad, but even after you come back to India. Or you go to the US and settle, or whatever, you go to another third country and settle. Still, that multi-asset approach will be serving you very efficiently. Building such a robust multi-asset approach should be the primary goal of an NRI, because traditionally you are a multi-asset investor.
Most people abroad compare investing in developed markets like the US with emerging or developing economies like the India. Do you think it is correct, and do you think the strategies they deployed there will work here as well?
There is nothing wrong in comparing one market to another, because you have the same money, you decide whether you put it there or here. So comparisons are always going to be there, and we'll have to live with them. But it is not this or that. A more balanced approach would be this and that. I'll do both approaches. I'll allocate less money to the approach in which I have lower comfort. And based on my outcome and my experience, I will keep reallocating money. So wherever your comfort grows, invest more. Wherever your comfort doesn't grow, keep it static, or maybe even close it out if you are uncomfortable. I think that you have to develop that mix and that choice by trying out both approaches, by practicing sincerely for 5 years or 7 years. Then you can decide which works more effectively for you to realize your ambitions. I think a lot of people do theoretical evaluation without experiencing, and they also assume that what they are doing is superior to an alternative, and they do that also without experiencing. I think that these things are avoidable. I think a person who works so hard and who earns so much and saves such a good number must be smarter for his own sake. Forget about all other stakeholders. Having succeeded so much, this success should translate in your life as wealth. You owe it to yourself. I think that is where the NRIs must be more aware. And when I say aware, self-aware. The awareness what they are having is information awareness of what others are doing. But it should be a self-awareness which says, I need something, is what I am doing going to take me there? Very sharp clarity is required in that. Then they will not do these random decisions, then hurried investments, emotional bonds leading to investments, right? And blind trust in the wrong channels like banks. So they need to basically work on this, and if they work on this, then they will be able to set themselves up for something which is in line with their potential and not way below their potential as whatever people are doing today seems to be.
To kind of conclude this session, one final question for the future generation. As we talked about in the first question of this interview, you said that a lot of students are going to continue to go abroad. They not only do this, but they also take significant amount of loans to do this. What is your advice to the younger generation, and how should they be viewing this?
I think somebody who goes to study abroad on a loan is morally obligated to repay that loan through their own earnings. That's the first point. If you think that you cannot repay that loan with your own earnings, don't go to study abroad. Your parents did not raise you with the expectation that they are going to have a loan when you go and study abroad. This is a sudden development which you should not trust on them. First point. Second point, even if they have the resources, if you take it as your moral obligation to repay that loan, your character becomes stronger, your capacity rises, and you become a completely rounded personality by just doing this one thing. Because everything else you do will be an extension of this, right? So developing this is very, very important for somebody who is going to study abroad. You need to repay. And when you repay, you learn more in life than what that university taught you when you went to study, or even what your parents taught you while raising you. So I think that onus of repayment of an education loan should be with the student. It should not be with anybody else. And if your parents spend their own money also, when you repay that money, your character becomes stronger. I think that everyone should imbibe this one trait, which will make them completely grounded and strong And these two things will make them very successful in the rest of the things that they do in their life. I think that's what I want to emphasize on this point.
Thank you for joining this for us very special episodes. For NRIs, they have their very unique needs that we at iThought tend to cater to. If you look at it, they have very varying needs as well as very varying financial goals as well. These require a very curated approach, and that is where we come in to help you. Do reach out to us for any questions or any kind of queries that you have. We're looking forward to being in touch with you. Thank you.